Good morning and welcome along to another episode of Portal Asset Management market commentary for the month, this time of April 2025. My name is Deryck. I am the CEO of Portal Asset Management, and with me today is Greg Galton, the Senior Analyst at Portal Asset Management. Good morning, Greg.
Good morning, Deryck. How are you this fine day?
Excellent indeed. And you have to be excellent because, of course, the performance over the last 4 weeks of April, and this is about the second week of May, into the second week of May for Bitcoin and the CCI 30 and the general market has been exceptionally good. So maybe we'll start with what is the performance and why have we seen such great performance in the last 4 to 6 weeks, Greg?
There's a lot to unpack there, Deryck. Yeah, certainly. For the month of April, this year, the CCI 30 is up about 8.2% and Bitcoin is up 14.2% for the month. But within that hides a lot of detail. Obviously, our listeners will probably remember, or they may not remember, Liberation Day on the 2nd of April, which was the day that Trump surprised the world and the markets and tariffied the markets.
Terrified.
We're putting in all these tariffs against all of the US major trading partners, and you saw a pretty substantial short-term price decline in risk on assets, including equities as well as Bitcoin. And Bitcoin fell to 74,000 from I think about 84,000 at the start of the month. So that was a big shock. Market wasn't expecting that. But then since then, Bitcoin's position as a defensive safe haven's really come to the fore. And that's something that we've been talking about for a short period of time now because historically, Bitcoin hasn't really been perceived as that. It's been perceived as more as a risk on asset. And its defensive safe haven characteristics, I don't think were clear to a lot of people. But BlackRock went away and did the analysis, and they found that yes, within 10 days of a geopolitical event or a surprise negative event hitting, that Bitcoin did tend to react quite quickly and quite aggressively to the downside.
Yes.
And there's good reasons for that. I mean, Bitcoin trades 24 hours a day, 7 days a week. So as soon as something happens, you're able to short Bitcoin and protect your portfolio if you're a traditional hedge fund manager. So it does tend to react very quickly. So in that 10-day period right after the event, Bitcoin tends to be down. But then 60 days afterwards, they looked at the data and Bitcoin tended to outperform the S&P 500 and gold. So it did really sort of have that safe defensive haven appeal. And what we saw post-Liberation Day was Bitcoin did drop, but then recovered and was pretty much in line with gold for the 10 days after. The 60 days that the judge is still out, we haven't hit the 60-day period yet, but in the meantime, it has outperformed the CCI 30 by almost a factor of 1.5. Bitcoin dominance has gone to 4-year highs. ETF inflows have been almost $1 billion a day, and IBIT, the largest Bitcoin ETF, has seen 20 days of inflows. So it has been a dramatic turnaround in Bitcoin over that period. So yeah, the numbers sort of mask the sort of volatility that's been there. But it has been an extremely strong performance that we've seen. Bitcoin's done very, very well. Got close back up to all-time highs at 109,000, but sort of fell short at the last hurdle. And that really, I think, was over the last couple of nights. We've had confirmation that the US and China have struck a trade deal, at least a ceasefire for the next 90 days. And I think you saw some profit taking on a sell the fact profit taking initiative there. So Bitcoin's sort of come back a little bit recently, whilst altcoins have had a bit more of a move up, and the S&P 500 has reacted. So Bitcoin's tending to lead it, and it's interesting. It tends to be looking to decouple from equities, which is part of the R thesis for Bitcoin going forward. Treatment of it as a separate asset class, but certainly that's really come to the fore in the last sort of 4 to 6 weeks. That whole month of April, with all the uncertainty around the tariffs, and then things started to improve. Bitcoin tended to outperform all those other risk-on asset classes as well as gold. So it's been an interesting perspective to sit and watch. And then when you look at the on-chain analysis, there's less and less Bitcoin sitting in exchanges. There's Bitcoin whales, so those Bitcoin holders with 100 to 1,000 coins in their wallet. They've been slowly accumulating through this period. So you can see there that there's been a very strong accumulation of Bitcoin during this period from that around the $74,000 lows, and that sort of we think sets Bitcoin up for a next move to its another all-time high, and then moving higher from here because there are some very, very strong tailwinds that we're seeing in terms of M2 global money supply. That's really coming out of the EU and China at the moment, but even the US. There's been some weakness in the US dollar that's led to that, and potentially the Fed winding down their balance sheet spend and potentially cutting rates sometime in the middle of the year into the end of the year. So all of those factors together, I think, are really sort of driving significant tailwinds for Bitcoin.
So there's a few things to unpack there, Greg. So one of them, of course, is that we discussed the fact that, 10 days after a economic shock of some sort, whether it be COVID or an election, results coming through, shock positive one way or the other, gold reacts. And it's normally been that safe haven. And that's what everyone remembers. They remember the 10 days after. No one's still tracking after 10 days to the 60-day period. And as brilliantly done as BlackRock has done it, they've analysed every major shock economically since January 1, 2020 to discover that 60 days after, with the exception of only one, Bitcoin has been dominantly better store of value and certainly hedge against the shocks of what we're seeing occur there. And also the first quarter of this year was the worst first quarter for Bitcoin since 2017, I understand. So it was not a strong quarter. However, it was a terrible quarter for equities, of course. And I haven't seen what it's the worst since, but it's probably since 2020 and the COVID impact. And we saw nearly $6 trillion wiped off the capitalization of the various markets, etc. A lot of money. Radiance Bitcoin Compounding Fund traded right through that period of time, of course, because it does. It's agnostic as to markets. Maybe you could talk about how that did trade 1st of January to the 30th of March, what happened in April, and maybe give us a little insight to where are we up to now, because it's so live at all times that we can communicate where it's up to now.
Absolutely, yes. In terms of the strategy for the Bitcoin compounding strategy itself is to seek to extract between 5 to 7% per month in additional Bitcoin by writing premium income. So that's very much our target. So for the first month of the year, January, we were sitting at about 6.5%, which was a great start to the year. We did struggle a little bit in February for a number of reasons that were outside of our control, mainly a shift to a different fund administrator. But that resulted in us only earning 3.7% for the month, which was below our target. But we were still on track in terms of the monthly average, sitting just above 5. March we basically fell 0.1% short. We earned 4.9% for the month of March. And then in April, we were able to earn 6.5%. So April, the volatility there really helped generate that additional premium income for us. We do like the volatility. We see it as a feature, not a bug. So that additional vol meant that we were writing a lot more premium income every day and resulted in that 6.5% for the month of April. So that took our full year result. Full year to date, Bitcoin extraction to around 21.5%. And I can tell you, Deryck, for the sort of the first 12, 13 days of May, we've already been able to extract over 3.5% already. So we're on track for another very solid month in May as well. That's the strategy. Is, like I said, it is agnostic to the Bitcoin price. But, we do rely on volatility, implied volatility being there, and we certainly have seen that pick up in the last 6 weeks, and it's been very profitable for us. We've been able to take advantage of that, and we've maintained our exposure to Bitcoin as it's rallied from 74,000 to 106,000. So that's a very important thing to clarify as well, as we've retained that exposure. So probably looking for the month of April with Bitcoin, as I said, up just over around 14%. we're probably looking around the mid 20% growth over the month of April, just because of that leverage we have to the upside and the Bitcoin price. So looks like it's going to be looks like it has been a very good month for us, and that May will continue to do so as well.
It's probably important to delineate the difference between what we report in dollar value price to market or US dollars and what our goal is. I mean, our goal is to what we call stack Satoris, and Satoshis rather. And our goal is to build Bitcoin. And so when we quote 6.5%, 3.9, 4.9, and this month's already over 3.5, that is the percentage of extra Bitcoin we've got. Because we can't control the price. Our view is the price over a period of time will go up and to the right, as that saying goes, and that Bitcoin's likely to be an extraordinary investment just as a holding token. But in fact, what we do is stack it. And that means that when we return, as we head up to 105,000, we've got substantially more Bitcoin than when we first started trading at 105,000, as an example. So we will report mark to market. And Greg, that's exaggerated a little bit more on the upside and a little bit less on the downside. Maybe you'd explain that and how the mark to market volatility when we report in US dollars is high.
Yeah, sure. So we're very much focused on, as you said, on stacking Bitcoin. And that's the reason that investors come into our fund, is they want to know how much Bitcoin am I earning and how much extra Bitcoin will I have? Because we obviously, we are looking to compound that over a period of time, and we are looking to double that Bitcoin over a 12-month period, subject to meeting those targets, of course. But that does come with the volatility. We do use some gearing in the fund, mainly to synthetically cover our positions, our calls that we're writing premium income against. And so what that tends to mean is that we tend to have a 1.5 to 2 beta to the upside to the Bitcoin price, and about a 1 to 1.5 beta to the downside of the Bitcoin price, because we're able to earn that income every single month, and then we have a mark-to-market impact on our perpetual futures position depending on what's happened to the Bitcoin price during the period, because we're on a platform that values everything in Bitcoin. Everything's denominated in Bitcoin, and that's the way we like it. We like getting paid in Bitcoin when we earn premium. And we don't want to be swapping out of US dollars into Bitcoin. We want to earn Bitcoin. So we're very much sort of focused on that Bitcoin side of things and continuing to build the stack as we go through the process.
Yeah, very much. And so with this process of continuing to accumulate Bitcoin, interesting enough, when we traded as individuals and we built our crypto holdings from our Verge, really CCI 30 and some early tokens, it was always the intention that you build growth in the CCI 30 tokens and you move it across to the digital gold, which is Bitcoin. And what's been fantastic for us in this, and for our investors that are coming in, is that we don't have to bother with that. We're actually building Bitcoin consistently. So for those that want to know more about that, of course, feel free to connect with us. We've just done a tour of these estates. A number of large family offices are now engaging with us and either deploying their Bitcoin or seeking to acquire more Bitcoin through the strategy. Either way, it works. And of course, we have exposure through the space through the Portal Digital Fund, which is a fund of funds, and it is a fund that has got generated about around a third, a little bit more than a third, to more long positions, about a third to market neutral, about a third to momentum and sentiment. We have been considering that fund in regards to its exposure and its balances. We are seeing some very, very clever positive alpha funds on the way through, and we will be progressively deploying more to that. Plus, that fund is deploying into the Radiance fund, so we can get some of that upside to it. So any updates, do you think, in regards to the general market that you want to speak of in regards to the Portal Digital Fund? And of course, we will keep people up to date with how the PDF is performing. We don't have an update yet for this month, but we will shortly.
Yeah, certainly. I think the outlook for crypto looks solid, and continues to look solid into the second half of the year, with that M2 money supply, global liquidity continuing to rise. The big argument at the moment, or the big point of discussion, is when alt season.
Yes.
Bitcoin dominance has been going up and to the right for the last 4 years.
Yes.
So, it's been very, very difficult to outperform Bitcoin. It's been hard to stack sats by owning other cryptocurrencies and transferring those across to Bitcoin at the right point in the cycle. So going to Bitcoin has been the way to go. But there is, I think that potentially before the end of the year, there will be an alt season, and it'll be an area that the Portal Digital Fund will be exposed to in some form or another and should benefit from that. But in the meantime, we sort of expect that sort of ongoing volatility. So those funds that rely on sort of market neutral but generating through vol should continue to do well during the period. And it should be, I think, it should be a good end to the year through that sort of process. So, very much looking forward to that.
Very good. One last question, and that is one that is posed to us often. We thoroughly investigated on a technical level, you did, the multiple inputs that indicate the changing of the seasons. And those season changes were often driven by Bitcoin and then transferred across through to the alts. We haven't seen it happen. And, it's interesting how markets are so damn clever and so damn difficult to predict, because here we are with all the right instruments to predict it, and it's not even going that way yet. And there is discussion that the four seasons will occur again in this particular space. And there's discussions also to suggest that Bitcoin won't be as heavily influenced or potentially not influenced at all by those seasons. Can you give some comment on why Bitcoin might not be influenced by the seasons like it used to? And why do we still think that those seasons are cycling?
It's a very good question, and there's sort of many different sort of aspects to the answer. I think certainly, I don't think it, not going to be totally exposed. I think just more muted. There's a big difference between winter in Montana and winter in Florida, right?
Yeah,
One's much milder than the other, right? That's the best analogy I can come up with, is that we've seen those Montana winters where everything's down 80 to 85%, where, the Bitcoin market has changed substantially over the last 2 years. There's now a lot more institutional investor interest certainly coming. There's corporate interest. There's corporate strategy, the likes of Strategy, for example, and now 21 Capital, Metaplanet.
Yes.
There's been a number of different companies come up with treasury ideas in the past week to hold Bitcoin. There's US states holding Bitcoin as a strategic Bitcoin reserve. There's the US doing the same. There's other nation states doing that as well. So I think there's a natural buyer of Bitcoin in the market, a buyer of last resort that hasn't been there in the previous cycles. So yes, not sure if the seasons will still be there, but if they are, definitely a lot more muted than they had been in the past. So, you could potentially see Bitcoin rallying up to, say, let's just call it $150,000 by the end of the year, and then maybe it pulls back to 120,000 or 110,000. That'll still be a 30 to 40% pullback, but it won't be sort of coming back down to 75,000, that sort of thing. So we just see all of those different factors playing into that. And then, of course, the other sort of final thing to mention is a lot of the fresh money or the new money that's coming into Bitcoin today is coming into people through IRAs and Roth accounts, through superannuation type products, and they're buying the ETF. They're not the sort of people that sell the Bitcoin and then buy XYZ meme coin. They're never going to buy natively digital assets. They're just going to hold it in their IRA and until they retire. There's not going to be quite as much profit taking, I see, from those sort of holders than there has been in the past. So that's another very different dynamic, and that's just reflecting of the fact that Bitcoin as an asset is maturing and continues to mature, and one where the whales are continuing to buy up Bitcoin. And that's, just look at that on-chain data. That's really what sort of shows that. So they may well be selling at 150, 200,000. Can't blame them. But certainly I don't think that there will be a mass drop-off. There's plenty of people that will be willing to buy that Bitcoin off them at those prices.
So what's interesting about, final question, what's interesting about the capitalization of Bitcoin is it's about $2 trillion. It's getting down close to $2.1 trillion or 2.2. And that, of course, is 10% of that of gold. And really, I spoke to a very large gold holder last week at a conference, and he was very interested in Bitcoin because he's finally got to a point where he said, I just need to learn about this and be involved with this. And one of the statements I said to him is, do you really think gold will go X in the next 5 years, 10 times its value in the next 5 years? And the answer to that was, no, I don't. And then he sort of looked at me and said, do you think Bitcoin might go 10x in the next 5 years? And my answer was, yes, I do. And I think you can see that just in its capitalization of 2 trillion versus 21 trillion. The simple maths makes that the case. Finally, next couple of weeks, impossible to tell, but what's your view to the end of the month of May in regards to what's happening at the moment?
Difficult one to call. I don't like calling it in the short term, but I think we're maybe in a bit of a short-term corrective phase. Let's see what levels we go down and test. Obviously, 100,000 is a key one to test. And if we don't hold that, then it's sort of mid-90s. But hoping that we're knocking back on the door of approaching all-time high by the end of the month. But certainly, if not by the end of May, then certainly into June.
Yeah, very good. And of course, from our point of view as a fund that sells premium, we are delighted that it drops to 90 and goes to 100 and drops to 90 and goes to 105. It's just volatility to us. For a hodler, you kind of want it to keep going up. And we do think in the due course it will be. Thank you so much, Greg. Now, if anyone wants to communicate with us, always welcome. Very simple. Greg at Portal and Deryck, Deryck, sorry, at portal.am. And you're welcome to communicate with either of us and we can share what we're doing along the way. Bye for now. And I look forward to seeing you all and you, Greg, in June. Bye for now.